Hi, this is Tom Hoskins for Mining Journal. I'm here with Mark Bojanjac, who's executive chairman of PolarX, which is an ASX listed junior with high-grade copper, gold, and silver projects in Alaska. Hi, Mark. How's it going?
Very well, thanks, Tom. We've got some great news this month, as you would have seen in the market.
Yeah, absolutely. It's been an exciting start to the year. Let's kick off with this updated scoping study. Maybe you can talk to us a bit about what that's done for the economics of the project.
Yeah, for sure. If you'd listened to my last podcast on this, which was only 3 months ago, I speculated that we might be able to actually double the overall projected returns on our Alaskan copper gold project, Alaska Range, and essentially we've done it. Within that time, we've done that by changing just two variables, just copper recovery and the grade of copper concentrate we would intend shipping off-site. So we're now up to 87.9% copper recovery for a 21.7% copper concentrate being shipped off-site. But the impact of that has been fundamentally game-changing for us. You know, it's essentially doubled the NPV to an Australian $625 million net, with an internal rate of return of just under 74%. I mean, you don't see many of those in the world ever as startups. And a 55% operating margin with 120 million Australian free cash flow each year. I mean, $10 million a month in free cash from a steady state operating mine for 9.5 years. Because of that, the capital payback on pretty modest 226 million Aussie is 18 months.
Okay, fantastic. And so, yeah, this is obviously, as you say, a game changer for your company. What's next then? Where do you take things from here?
Well, I think, once you've got your head around the current metrics, the takeaway is this is already resoundingly projected to be a profitable mine. And it's not all that's left either. There's a lot more left in Caribou Dome. I'm putting up a slide now, as you can see. There's a cross section. Now, the last hole we drilled here was 19 metres at 7%. Yet our projected mine grade is 3.1% copper. It's a resounding improvement over and above those average grades, and it's wide open. The whole resource model at the moment has only been modelled from surface down to 300 metres. Now, we already know the geology extends another 150 metres below that because we have an existing hole or two into the geology below that. It just needs infill drilling, and we'd expect that to still be open. Now, at the moment, the entire resource model and this scoping study is based on one big open pit because the grade, frankly, justifies that. Now, with more underground drilling, we would go underground significantly earlier in the piece, I think. So a very shallow start, 4 to 5% copper from surface, astounding grades by any standard. And push into underground quite soon on and just keep on going is the plan. More drilling, extend Caribou Dome. When you look at the next slide there, just another 2 million tonnes of this same material at the same average grade would add another 200 million Aussie net position to an existing $625 million NPV. So, that's another 30+% uplift on an already resoundingly attractive position from just another 150 metres depth push here. So we're certainly going to be headed back on site to go and get that this season is the plan.
What sort of timeline are we talking about for this infill drilling program?
Look, ultimately with Alaska, the drill season there is pretty much aligned with the Australian football season. I think that's largely coincidence, but it's very much from late April, May, right up until in September is the drill season. So we'll be pushing on site, probably for a May, June startup, hopefully with 2 rigs, non-stop 24/7 because it never gets dark in Alaska in summer. and we'll just roll straight through until we've got what we want.
Fantastic. And then further out, sort of midterm plans for the business. What's the direction of travel?
Well, it's not all just Caribou Dome either. We've got Zackley as well. Zackley's mined in the second half of a current projected scoping study. Because of that, it has less immediate economic impact, but not really. It's just as good an average grade from a net return point of view as Caribou Dome. And in fact, to be honest with you, probably have more immediate surface upside there, as you can see in this slide here, than Caribou, and that we've drilled this for another 2 kilometres outside of the existing projected mine plan. And some of those hits are up to 50 metres at 3 grams per tonne gold from surface that have yet to be followed up. And it's just strike drilling everywhere. It needs infill drilling. I think we've got years and years of progress here to make yet. But what we do know is of the existing drilling to date, existing resource, having run a mine plan around it to a quasi-reserve in the scoping study, that we already have something that would be resoundingly economic by any standards. And anything we add from here on is straight to bottom line. It's a wonderful position to be in as an explorer. You don't often get that. It's investment for additional bottom line instead of just getting lucky drilling holes. It's a whole different paradigm now.
Well, it sounds like an extremely exciting year to come for you guys. So we'll be very happy to catch up again in the coming months. But for now, that's all we've got time for, Mark. So thank you very much indeed for joining us. Our viewers will be extremely grateful as always, and look forward to speaking again soon.
Great. Thank you. Hope to be back with even better news.
Excellent. Thanks, Mark. That concludes this video for Mining Journal.